Okay, everybody, welcome to my day trading setups, entries, and exits video. I know a lot of folks have been waiting for this one, so I'm super excited to bring it to you. I'm using a new mic today. I finally set up my, I had a whole collection of mics sitting in storage, finally pulled one out, so hopefully the audio will be much improved. Before we begin the presentation, I just want to let you know that this presentation is not financial advice, and I'm not a financial advisor. So any trades that you take using my indicators or ideas are your trades and your trades alone. All right, so today what we're going to discuss, we'll talk about my trend mantra, which is a collection of ideas that I have put together that are, widely understood, and I just, have it as a thing that I look at every morning and kind of walk through to get my mind ready for the day. And then we'll go through a bullish setup checklist, as well as entry and exits using the 10-minute and the 3-minute, and then the same thing for bearish setups. So we'll walk through the checklist as well as go through entry and exit on the 10-minute and the 3-minute. And that'll give you, a lot of folks have been asking about how do I enter trades. I primarily use the 10-minute for my trend. I do enter trades on the 10-minute, particularly if they're not fast moving. And, if they're super fast moving, I like to zoom in to the 3-minute, which gives me a little bit of flexibility into entering the trade. Exits can happen on all those time frames as well. But it's really more a question of levels and EMAs, which you're comfortable with. Before we move forward, if you like my videos and if you like this video, smash the like button. If you're interested in learning about more about my ideas and trading, smash that subscribe button. And if you want to be notified in the future of videos that I've made, you can hit that bell notification icon and you'll get a nice notification from YouTube. So let's talk about my trend mantra. So these are, 7 statements I like to read every morning before I jump in. These are actually in my trading. I keep a notes page in Apple Notes, which is effectively my trading system, which I plan on sharing in more detail with everyone over the coming months. But this is a section that's in my trading trading system, and I like to review it pretty regularly, if not daily, just to get my head straight. I am not long or short biased. I just play the trend. Trend gives me conviction, and with solid trend, you tend to get those bigger winners. Often with a really, really solid trend, you're going to get to at least the mid-range level on ATR levels, if not full ATR, which can be a really, really good trade in most cases. And that varies depending on your strike and your expiration. I don't trade the opening 10 minutes. This is just a rule I have. There are a number of traders that I follow that also don't trade the opening 10, 15, all the way up to even 30 minutes. I like to wait for that trend confirmation. So, I don't trade the first 10 minutes just as a rule, unless there's something very specific I'm trying to test, and that's usually in very, very specific situations. Like, for example, today I was trying a strangle on the SPX at the open because it was right at the previous close, just to test something out. But typically that's not something I want to get into. I'll wait for trend, and then I'll take a trade when I have that trend confirmation. I don't trade in a sideways market. Chopzilla is hungry, loves to eat your premiums. And so there's no point in trading in a sideways market. I'll just wait for trend. And that brings us to the next bullet point. I wait for trend confirmation. I'm looking for price above EMAs. I never chase the trend once I get it. I wait for a pullback to execute my trade. There's always a pullback. The question is, will it be timely enough for you to be able to take the trade for some distance to make a profit? But there's always another trade, so there's no point. You get a good trend, you get a solid ticker. It looks like it's going to move. wait for the pullback, wait for a pullback to EMAs, wait for a pullback to support or resistance, depending on which side of it you're on. And yeah, you know, don't chase. And then I never play the opposite of trend when there's momentum. You know, there are certain situations where it makes total sense. You know, probability of getting a bounce when you've gone one ATR either direction, you know, one ATR to the downside, getting a bounce to the upside is likely. When you've gone all the way one ATR to the upside, it's possible that you're going to get a rejection there. And you can see that. It's played out many times like that on many tickers. And so you can play those probabilities, you can hedge them. But in most situations, when you have momentum in a particular direction, you've got clear trend, it's probably gonna go against you if you try to play the opposite trade. So I try to never play the opposite of trend with momentum, you know, and that means if it's just moving, right, you're never seeing it retest those 3450 EMAs. It's just kind of clear, headed to the sky or headed to the abyss, depending on which side you're trading. All right, so let's talk about bullish setups. And again, I just want to refresh everybody's memory. This is for day trades. I'll do a separate video on swing trades, and actually I'll be able to dig into the new feature, well, relatively new feature of multi-day mode and how that sort of aligns with swing mode in taking swing trades. But this is primarily for day trades, so you're going to enter a position and you're going to exit the position before the trade, before the day finishes. So in my setups for ATR levels, there are essential requirements for the setup, and then there's sort of ideal requirements for the setup, and I'll walk you through those. So I'm looking for a bullish trend, and what this means is using Ripster's EMAs and Ripster's golden rule of trend. His focus is to see that it's above the 3450 cloud. That means that it's bullish. If it's above the 3450 and above the 512, that's a little extra bullish, and that'll give you a little bit more confidence. That, in fact, is when the label for ATR levels, the trend label, will go green. So it's going to go green when it's above the 3450 and above the 512, giving you some extra confidence to know that you're sort of in a bullish trend. And I'll be adding a capability also for showing stacked EMAs as well. The second thing we're looking for is the close above that call or long trigger. So we're looking for a 10-minute close above that call or long trigger. And you can change the labels. That's a setting for people who are trading options. You know, that's going to be, you're going to want to have it say call. If you're trading commons, you're going to want to have it say long. And then we're looking for less than 70% ATR covered. How would you know that? Well, I've given that to you in the ATR levels. There is a range indicator, and it will tell you how far you've gone. Below 70%, it'll be green. When it's above 70%, but below 90%, it'll be yellow. And then when it goes above 90%, it'll turn red. Now, that doesn't mean it necessarily won't be able to go higher, but typically once you've covered the range, you know, as we've discussed in the past, the probabilities are now against you, unless there's some sort of news or some sort of macro condition that's pushing that ticker higher or lower, higher in this case. And so then there's three ideal checklist items that we want to look at. We're looking for a super bullish trend. Super bullish is in my book is defined as when you not only are above the 3450, but you're above all of the EMAs, the 5, the 8, the 12, the 21, the 3450, and they're all above each other. They're all stacked. So the fastest is above the next fastest, all the way above the slowest, and you'll see what that looks like in a second. And then, you know, some bonuses here for an ideal situation. We're in a squeeze to the upside and we're oversold on RSI, or I use ready, aim, fire. But yeah, you can identify that with RSI. So if you have all 6 of these, man, that's a good setup. It's a high probability setup. You know, the squeeze is in itself already, you know, if you have stacked EMAs and a squeeze, that's already, and you're close to the 21 EMA, that's already a very bullish setup. So when you add in a couple more of these things based off of the ATR levels, you get into a very, very nice setup that will most likely end up in a positive trade. And it's not always. And I'm going to show you the examples next where it starts out in chop, and then eventually we get trend confirmation, and it goes in favor for us. So here's the bullish setup, entry and exit on the 10-minute. And I chose this example. This is Square from back in March. I looked through a lot of different examples, and I really wanted to show you an example on both sides, on each side, where you have a little bit of chop, and you can see here it's it opened with some nice pre-market action, goes above the call trigger, but it goes up here and it gets wicked off. And then all of a sudden it drops below the call trigger, it tests that 34.50, but it's really not sure. And of course, if you had gotten in on this opening candle, sure, you could have exited, positive trade, but you could have also gotten in here and then thought it was going to keep going and then come back. Maybe you stop out break even, or, you put your stop down here at a loss. So that opening candle can be kind of dangerous. Sometimes it works out, maybe if you're scalping, but sometimes it can end up being problematic. And so, it tests this 34.50, comes back up, closes above, maybe you get in there. Again, it can sort of stop you out. So, this is difficult. This is one where you might want to enter, but as soon as you enter, maybe it's going up and you're wondering, hey, is it going to keep going? So setting a stop is important. You might maybe set a stop down here. Of course, this is all dependent on your risk. You could set another stop over here if you want instead. But this would have been stopped out. And see, it's chopping between. You can see the 512 goes from green to red. And we never really have clear price action continuity above that 512. Until a little bit later. So we've tested this 34.50. It's clearly not breaking down, right? The trend is still still bullish, which is good. It's continuing to stay above that 34.50. We've got a nice clean move on the 34.50. Eventually, we get this nice big green candle and breaks above the 512. This is where, things start to get interesting. It breaks above the 512, then we get a little bit of continuation above. We get another green candle print, which is nice. So that's some extra confidence for us. Now, at this point, we don't want to get in, because if we get in, we're pretty far from the EMAs. It's likely that it's going to retest, right? And of course, you can see the price action coming, so you know that it's going to retest. But I can tell you, even if you didn't see this candle, it's likely that it's going to come retest this 989 EMA. Right here, right? It may even go back to the 21. That's the pivot. That's the mean that we're looking for. So often it will come back and retest that 21. And you'll see, if you're not looking ahead already, you'll see that that'll happen. And so, here I'm very interested in this. And now I will look for adding a position at the 8.9. And we get a pullback here. This could be an add right here. It's not quite at the 8.9, but it's close enough. And you get a nice bounce back. Closing candle, the candle closes right there. And then we get to the next candle, starts moving up, right? Now I could get into this. I could wait again if I miss that entry. There's this weird, almost doji candle that sort of comes down. Now that might not give you a lot of confidence, but it came all the way down here. This was another add position. You had 3 opportunities here to add or to start your position. Comes up here, forms a doji. But then we get continued price action to the upside. So, this is looking good at this point. We're just riding the 512. Now, this can scare people a little bit, especially if you're looking at your P&L. Right? That might scare you a little bit, which is why I never look at my P&L. I just look at the trade and focus on the trade and trade the plan. My first profit target here is going to be this mid-range, right? That's always what I'm looking for. Is I can always get in a position slightly above this call trigger. Hopefully I get the pullback, enter the trade. And this is already a good trade, right? If you're doing 0DT or you're doing, in this case, weeklies, that's a pretty good trade already. You're going to get a decent return on that. You can also just start to scale out, right? This could be the first scale out point. If you have multiple contracts, maybe you're adding at each one of these pullbacks, you could start scaling out right here. And that's not a bad idea, right? We go above the mid-range level, and then it sort of drops down with these 2 big candles, which could be kind of scary, but it never breaks the 21, right? So this is another situation where, it comes back to the 21. This is the pivot. You could add here if you want to. That's also a good place to add some more position if you want. You've taken some profit here, maybe add another contract back in. And you can take more profit when you reach back this mid-range. That's perfectly acceptable, right? Maybe you take a little bit more off the table right there. And then leave runners, right? And what you can see happens is it just sort of continues to ride this 512 all the way up, and it hits 1 ATR at the end of the day. That's a pretty darn good trade. And, you know, maybe we got faked out early on. That's okay. You cut your position real quick. You're not taking big losses here. Maybe it happened to you twice. Maybe you got faked out twice. This is the power of being focused. If you're focused on this ticker, you're seeing that the trend is to the upside. You stick with it. There's opportunities to get in. There's opportunities to take profit. There's opportunities to get even more profit, and exit this day trade in a really, really positive place. So that's the 10-minute. Now let's see. You know, let's say we saw this big candle and we're like, all right, now we're getting excited. It's going above. We're looking at these two wicks, top of these two wicks, to see if maybe we can get past that and we start to ride the 512. But, you know, as soon as it breaks here, maybe we decide, all right, let's time to go to a lower time frame and see what's up. So this is the 3-minute, and you can see, you know, it breaks above the call trigger. At this point, the EMAs are stacked. So the nice thing about the 3-minute is everything's moving faster. So although you have fast and slow EMAs, each one of these is much faster than the EMAs that you're going to have on the 10-minute. And typically, I'm no longer really looking at cutting at a 21 or cutting at a 8.9 or cutting at a 512. I'm looking at this 34.50. Basically, that is my pivot for the 3-minute. As long as it stays above that 34.50, I'm pretty happy. So it jumps up here, and I wait for a pullback. I can add right here. It's a beautiful spot to add. Tons of spots to add. You know, maybe you can add back at the 21, no problem. Tips to the 21, you can add. There's tons of spots here. You have tons of opportunities to get into this trade. Nothing's gone below the 34.50. Now you can go all the way up, take some profit right there. Comes back to the 21 on the 3-minute. You add some more right there, take some more profit if you want. Comes all the way back to the 34.50, but does not break it. It stays at the 34.50 and continues to ride the 512 all the way up. So in some sense, this is a really simple way to look at it. Is if it's above the 34.50 on the 3-minute, you know, you can look for a pullback to the 8.9, take the you know, add the position, continue to add and scale in. And, you know, look at that 34.50 as your stopping point, right? You know, it's above the VWAP as well. I've got the VWAP on my 3-minute. But you can see it just sort of rides the 512 all the way up. And you can see the chop here, right? The chop was even more apparent, I think, on the 3-minute than it was on the 10-minute. So, you know, you can zoom in when you're looking again on the 10-minute, zoom in to see what's going on, to see if there's an opportunity. And, of course, still, I think we may have gotten in on this. But we could have cut it as soon as it dropped below the 34.50, right? Or we could have put, you know, a stop at the call trigger. We could put a stop at the previous close. It really depends on your risk, and that depends on your strike and your expiration. So, you know, those things need to be calculated out for your trade plan. But, you know, that's how you can take this trade with the 3-minute. So you can take it with the 10-minute. You can take it with the 3-minute. Most of the time, it just depends on the velocity of the price. So yeah, that's the bullish setup, entry exit on 10-minute and 3-minute. Okay, so let's talk about the bearish setup checklist. So again, 3 essential items and 3 ideal items. Here we're looking for a bearish trend, the price below the 34.50 EMA. And we're looking for a close below the put short trigger. And again, less than 70% ATR covered. Again, you can, you know, this one's a little bit up to your taste. I just, you know, prefer to look for that green label on the range indicator. That gives me the most confidence that I'll be able to extract some good profit from a trade. And then the ideal setup is that we get something super bearish. Again, this is the EMAs are stacked above the price, so the price is below all of the EMAs, and then you have them stacked from fastest to slowest up. And we're looking for a squeeze to the downside, and we're looking for overbought signals on our RSI. So these are sort of an ideal scenario for a bearish setup. All right, let's look at our trade. This is SPY actually from last Friday, which some of us took, and it was a monster. It went 2 ATR, which is kind of crazy, or almost 2 ATR. But this is a beautiful example as well, just like the square example. We have a little bit of chop sort of in the morning where it's kind of determining where it wants to go, goes below the put trigger. We get nice stacked EMAs. So, you've got the price action here. You got the 5, the 8, the 12, the 21, the 34, and the 50. They're all stacked. But then we get a retest of the 34.50. But it stays bearish. It's nice and stacked in pre-market. So we'll look at this first candle, and this is a great example of why you don't want to take the first candle. I mean, I guess you could scalp this if you're, there's some sniper scalpers out there that could have done this, but that's not my style. If that's your style, awesome, congratulations, you rock. But that gives me anxiety. So watching this, it's not quite a doji, but it's kind of an indecision candle still. Equal weight on the top and bottom wicks. Then we get this nice candle to the downside, bounces off of the mid-range level and comes back. So I'm looking for an entry, if it comes back and we get a retest. So it comes back to this 8-9, but then it sort of keeps going, gets rejected here at the put trigger, and then flushes down. Now on this flush, after this second candle goes down, I'm starting to get real interested. But I would like to wait for a pullback to the 8-9 EMAs, and that doesn't really happen until here. So, on the 10-minute, this is a trickier trade. I would probably enter here on this pullback to the 21. We go back to the 21, comes back down. This is probably my entry on the 10-minute, and it's fine. We get a nice flush down, take some profit right here. Not really a great, maybe I could have added some more on this second candle. Not really great places to scale in until we get below 1 ATR. But at this point, it's done the meat of the move. It's hard to understand whether or not it's going to go further. So, I'm probably going to take profit here. And that's not a bad trade. That's a decent trade. Maybe you can leave some runners if you think it's going to keep going. But, those are probably going to get shaken out here because you're going to have a stop that's close to your 21 or, at this minus 1 ATR level. And if you happen to leave runners, of course, beautiful move straight down here. So that's definitely an option. But yeah, I mean, I would probably enter here, exit here, decent trade. Maybe that's 30%, 20-30%. That's not bad. Depend if it was 0 DTA, if it was SPX, it's a lot more. So you can based on your risk, you can figure out which instrument you want to trade. Yeah, so it's a good trade. On the 3-minute, I think it opens up some eyes, I think, and it makes it super clear when to enter and exit. Again, we have the flush down here, so this is really nice. It goes below the 34.50, everything's stacked again. We're looking for those stacked EMAs. Doesn't matter what time frame. That's a really common thing to look for to kind of get a sense of whether or not you're bullish or bearish. It's below the 34.50, so that's great. It's below VWAP. There's opportunities to enter here. There's opportunities to enter when it retests the 34.50. You can exit on the flush down. It sort of keeps testing this. So this is where the 3-minute is super nice. Kind of test this, and it keeps going down. Maybe you have a tight stop here on the minus 1 ATR level. Maybe you're keeping a stop at the 50 EMA. You could keep a stop at the VWAP, and there's a number. You could keep a stop at break even where you were. There's a number of different ways you can play it. But this one keeps just riding down again. 512s all the way down, never breaks the 34.50. So this is a really solid trade all the way down. You could have held this one and taken profit along the way. Maybe on these retests of the 21, you take a little bit of profit on those. But yeah, couple different ways to play this one. Really good trade. I know a bunch of folks took this one on Friday, so congrats to all of you. And that's it. That's day trading setups, entries, and exits using my levels. I will be producing a lot more videos this week on other topics that we've discussed that people are interested in learning about. So I hope you enjoyed this one, and if you have any questions, drop them down in the chat. And happy trading.